net interest income matches the growth in loan book, 29, a cent for a cent. The loan grew by 29%, income from the loans grew by 29%. That validates everything we said. We didn't change interest rates, we didn't change anything. We maintained to support the customers to grow. Interest expense, because of the debt, grew a little bit faster, but net interest grew by 28%. As we said, non-funded grew by 26%. Total income grew by 26%. We were able to generate profit after tax of 24.4 billion, up from 17.9, a 36% profit growth. And earnings per share to the shareholders, to the investors, grew by 35%. And so we could see the trend for all stakeholders, the shareholders. Efficiency is contributing 36% profit after tax, and the return is straight going to return per share of 35%. The strategy we have adopted is the African Recovery and Resilience Plan. And as you can see, it's not a Kenyan plan, it's a regional plan, it's a continental plan, because we have realized the only thing that can support us to succeed is the market. And the market, the larger the market, the better. So that is why we have leveraged on the East African Community Common Market and leveraged on the African Continental Free Trade Area, the Commonwealth arrangements. 21 African countries are in that market, and seeing how we can leverage on market capabilities. 39% of the total income of the group is now non-funded. So there is no provision on it. It's realized income. So there is nothing. It's not capital consuming. It's not on the balance sheet. And we are very excited that only for 61% is coming from our loan book, is coming from our fixed incomes within the treasury, and that composition. And then how are they growing? We are seeing interest income on loans growing at 21%, but we are seeing non-funded income growing at 23%. And that gives us huge comfort that the high quality streams of income are growing faster than interest income. In 2015, 27.7 million transactions happened through the branches and ATMs. Same year, only 53.7 million transactions were in Equitel. 7 years later, the 27.7 million transactions that happened in the branches, they have just come to 19 million transactions. The number, as brick and mortar transaction declined by 7.5 million transactions, the number of transactions going through the digital infrastructure has gone up by 12 times. 12 times in 5 years. 663 million transactions happened on self-service platforms, devices. And those who came to see us were only 19 million. What attracts people to Equity Afya? Quality, affordability, and professionalism of the doctors. We talked about building future leaders. Equity Afya clinics are all managed by Equity scholars, the ELP leadership programs. We have planted 19 million. We hope in the next 2 years we'll make it to 35 million trees that we committed ourselves to. But we discovered the big thing is not in planting trees. The big thing is removing people from using cutting trees for fuel. And as you can see, how much we are focused on energy devices. And we're investing substantially to ensure everybody uses clean energy and allows the trees to grow.